Hello everybody, I'm Isaac. Today I'm going to take you through a bund trade. So this one I'm looking at an offer that came from the UK PMIs. So this was on Friday the 22nd of October. Now, if we just quickly go over the structure of the market, I mean the market's pretty bearish. This is a daily candlestick chart, so it came up like that on the other side. So it's kind of offering now back against the squeeze that occurred earlier in the year. And yeah, the market's kind of like right at its lows. So there's last week's lows and it's kind of pushing through that. Volumes aren't all that high. I mean, see, we're going into new territory, but like in terms of where the rest of the volumes were, we're not like at the upper end of them by any means. And kind of like another way that shows itself is like, you can see how poor all the structure is in this market. It just like the profiles are getting pretty ugly. So yeah, quite a tricky market. And so you'll see like when I executed this, like this whole week I executed everything with really small size. I mean, really I only should have sized bund small, just because I was really aware that in conditions like this, I'm going to get a lot of my trades wrong. So this one I got right, but there's so many other trades I took this week that I got wrong. So yeah, so for me, the sign that this market was going to get tricky to trade was just like looking at the profiles and how poor the shapes are. Say on a nice, if I just give an example with this profile, when the market's trading well, that profile might look more like that, whereas here it's looking kind of like that. And so, yeah, that's the difference. So yeah, when they've got that poor structure like that, poor shape, then I'm just being a bit more aware. And you can see here, I mean, this is not so relevant for the setup. I'm kind of almost gone to the summary, but like this market left a really poor low and closed high. But anyway, so we're going to look at this offer. Now, what happened here is this market's come back down to the lows. Here's last week's lows. It broke the lows, pulled back, and it's auctioned up here and then come back down to the lows. It's opened here below. And so now we've got to ask the question, well, say the market held this pullback, so we're still kind of still bearish this market. But we've got to see, well, okay, when you come in the morning, does this market start to build structure down here and offer, or does it maybe pull back, fail up here, and come back again? And so that's what happens. The market pulled back a bit, or it bounced here a bit. I think it had a false break of the IB low, came back up on, say, some of the European PMIs. But then sold off and was somewhere nearish the low of the day at the time for the UK PMI. So now, as I said, we've gone through, this week it failed below last week's low, but then held a pullback and driven back down, open below. So that rejection of back in the range above, and then the market coming back down was a sign that I could play for a continuation to the downside of the auction, even though it was quite like the structure was quite ugly in terms of the profile shape and the volumes. It still said that the market was bearish, so that was what I wanted to see to get short. So if I just summarize that again, and actually I suppose really introduce the trigger for this trade. So the market is quite sensitive to data relating to UK inflation. That's because a few weeks ago Bailey came out and said that that a rate hike was potentially appropriate before the end of QE, and QE is ending pretty soon, and so that really implied like a November, December taper, and as things got closer and closer, it looks maybe like it could be in November. So that was important, because then what happens with the PMIs sort of suggests, well, like if the number's really big, that's like inflationary sort of predictor in a way, and so if that number was big, then that's really pointing like another bit of information skewing maybe the market's opinion of taper towards November rather than December. So that would be bearish bonds. So that was what I was thinking there and what I used for the trigger. But in terms of the structure and what we talked about before, bunds were technically weak. The response to the EU PMIs was pretty like neither here nor there, like little. And I put here, the market's not expecting much from the ECB. So, okay, it kind of makes sense that the market's not moving a lot to that because they don't expect the ECB can do anything. But the UK prelim PMIs came out as a surprise beat, so above expectations. And then that's, I suppose really triggering, the rate hike expectations, and then the markets, a bit more responsive to that. So the trade idea is basically just to get short bonds because I thought, well, we're technically bearish, and now it's given this market a good reason to go now. Okay, so if we look at the 1 minute structure, so here you can see what I was talking about before. Here's the IB, the market came down, might have been on the French PMIs, something got picked up, driven back through this range, popped up here on the German PMIs, and then got sold into and came back down. I think the market must have been in here at the time of the UK one. So what we've got here now is we have this is our rejection into that range above. I said we've opened below last week's low, we then popped up, came back down, so that's that. And so now we're bearish, sort of aligned bearish again, and then we're back in value for the day, ready to drive lower. So this was like an ideal setup for me. So what we're going to look at now is just how the number came out and then the way the trade started. So like one of the tricky things and one of the lessons that you really needed to learn in order to execute this was that, not every time that you get something, the market has to just immediately go. You can have obviously price action like that where something comes out that's bearish for the market and the market just starts selling and selling and selling, right? But what we're going to see here is more like something comes out that's bearish for the market and then it sort of holds there, but no one's doing any buying, right? And so, okay, well, I'm bearish, well, this should eventually sell off. And so it was like a little bit more of like a patience thing, because rather than you getting confirmation, you just didn't have invalidation. Well, that'll make more sense once we watch it later. So let's do that now. So my bund later, if it's going to let me circle it, yeah, is this one here. So it's 1 second now till the number comes out, and so it's just come out, and you can see I got short, and now we're just going to watch what happens. So like the market's still trading my price. I think maybe I missed like a tick or two. I think that might have been where the market was when the number came out. And so you can see there's not really a lot going on. So okay, it took 21s offered, sold a tiny bit of size, I think, into the 20s. It's taken 21's bid again. The bid here is pretty weak, but I mean, no one's really selling a huge amount into it either. One lot sold down into 20s. Okay, now a bit more size has come through. 72 lots down to 19s. Okay, now it's up to 150, 160. But still, this isn't like really rapid selling, right? This isn't like what you'd expect if the market's just doing this. I mean, we're still, we're like 50 something seconds in, and I'm still on side, like 2 ticks. And there you go, 7 lots was into the low price. So it's not like everyone's rushing out to sell the market, but we are getting a bit of an offer here. So now 100 lots into 18s. And so you can see now the pace is starting to pick up. So it was that like first minute that you really had to sort of sit there and go, okay, this isn't really like doing a lot, but we are starting to see as the market like drives a little bit lower, a bit more volumes come in. So the market's now bid back up to the 19s. And so you can see there was like 5 lots bid there, now 66, 107 total, and now 4 lots are sold. So, like the transaction like pace here in size it's not a lot, right? It's not giving you a lot to go by. But what it is showing you is that although maybe you're not being rewarded very fast, you haven't been shown to be wrong. And I think that's what was key. So, I drew that line to where the scene of the crime was, or the market, until it really goes through there, you're not wrong. And so I think you just had to hold that opinion of, well, I'm not wrong, so I'll stay in the trade, rather than like this market, and rather than think, well, this market's not proving me right all of a sudden. I suppose because you're at the lows and, we talked about the profiles, they weren't a very nice shape. I suppose if the profiles don't have a very nice shape, they're probably not made with a very nice trade. And so, I don't even know I did that. What have I done? Oh yeah. So I think I almost got out of the trade there because I didn't really like the price action, but then fortunately didn't get out and just thought to myself, okay, like stay in it until you're wrong. So you can see like the market went down there and it's already coming back. So, it's really testing me on that idea that I just spoke to you about, that like it hasn't proven me wrong. And so I've got to stay with it. So now, this number that I thought was like important to the market kind of created an offer. It seemed like, I don't know what I was doing. Why did I put those orders in? But anyway, you can see it's even making me question myself. But what's like really important here is that, like it hasn't proved wrong. The way the market's been auctioning is really poor, and so you just have to sit with it. So now, the market's really bidding back against my position, and against obviously the numbers that just came out. And all we need to see here is just the inability of the market to bid, back through the scene of the crime. And if the market's unable to do that, then the downside trade's still on. It could happen in so many ways. And I think that's probably the important thing to think here is when the market has really low participation, there's like a number of ways that this could play out. And, so say, I don't know, let's just make this is the, make sure I don't stand in front of the letters. Like this is the source, the market could have gone like that, or it could have gone like this, or it could have done any number of things in between. And then the only way to make sure you're in for all of the different possibilities is just to make sure that your stop's above that point, because that meant that every scenario that it possibly could have played out as, then you get to be involved in it. And so you can see here, this bid is still really slow. This is probably not the most exciting thing to watch, but is like quite an important lesson, because the market still went like quite a few ticks. If you can get a bit, confident in this and just have the ability to wait it out, because you can see that actually that the pace started to pick up. And so what's happened is the market's come back. It didn't, it bid back against the move. The move never really had great acceleration. But then if that fails, then you're just sort of like looking, and often what happens is like the further, it'll slowly edge away from the point of origin or scene of the crime, whatever you want to call it. And then as it gets further and further away, the price action will start to pick up. And that's quite hard because, you're usually expecting price action to be quite quick at the start rather than at the end. And so what we'll see eventually is that the price action velocity should be a bit more lively as the market moves. And so I think before there was a little bit of a flurry of trades, and you saw a bit of volume going through, but you can see it's already died out again since. So, all right, so you can see it still hasn't really offered away. Okay, I might just pause this and we'll go on twice the speed. Okay, so this is going to look faster than it is, so hopefully it's not too deceptive. All right, so you can see it seems like there's a little bit of a bid in the market, I suppose two-way in the market, right? But it hasn't, again, really offered away to the downside. So now the market's coming right back. I mean, we're buying that back into the 20s, the 21s. So this is the point here that, really what I was saying is key, right? This has come all the way back. You suppose you're asking yourself, this shouldn't be happening, right? This isn't what you would expect, if you're expecting the normal type of trade where you've got kind of all the aggression at the start and then it kind of tapers off maybe towards the end. But now here, okay, a bid back up, but now we're starting to see a lot more, a bit more of a firm drive from the sellers. So we want to just see the market be able to almost change personality and push away. And there we go. So now the offer is a lot more aggressive. It's almost like it came out of nowhere, someone just at that moment decided to step in. It's kind of funny the way the market acts, but you've really just got to be open to kind of I suppose the fact that, it can happen so many different ways. You just have to go, all right, well, where am I wrong? And then just stick with that. So you can see now the market's really starting to take off. All right, I don't think we'll go too much more, but what I really wanted to show was just the difference, in the pace of how the market started trading lower, coming back, trading lower, coming back, and then, it really started to go. And just the fact that you've got to just trust in the fact that there are lots of ways this could play out, You don't know which way it's going to play out, but you do know where you're wrong under all of the scenarios, all those possibilities, and that was back above the start. And so that's where you would get in. So if we go back now, get out of the trade, that's where your stop would be. So if we go back to here, get rid of some of my drawings, this is the scene of the crime of it here, offered down. That's where that churn that we watched, the market came back and then got sold into. And you can see once it went, it was actually quite a clean move. And you've got quite a lot of ticks there. There was like an overnight low somewhere down here that the market didn't quite get to. It pulled back, went back to the low, again traded the same price, and then pulled back, so it left you a bit of a ledge low for the future. So another trade idea for maybe later in the week, I'm not sure. There was a lot in this, but it was really just about understanding the way the market can do this and how long it can take before the market really goes. Like I said, it can be pretty boring to watch, but then you have to sit there and understand that before you get all of this. And this was one of the best trades of the week. You could have put size on this, it would have been hugely uncomfortable. But in a week where there's not a lot of opportunities, if that's what you've got to understand to take the trade, then that's what you've got to understand to take the trade. Okay, so here, key factors was just believing in the idea. You had the technicals, the news or event, whatever you want to call it, alignment to lean on, so they're both pointing in the same direction. So just go, okay, where am I wrong, and then let it be. And this really shows how you have to have this anything can happen attitude and not really go, all right, I'm expecting the market to accelerate, it's got to accelerate. If it doesn't, I'm wrong, because clearly if you had the attitude, you were wrong, not the market. That's it for today. This one's very much about your attitude to trading as it is to execution. But so maybe a slight bit slower. Hopefully it wasn't too boring, but you can, if you understand this sort of stuff, you can still make some quite good money out of slow markets, the ones that maybe have price action that not everybody is expecting. So anyway, just another possibility for you guys to think about. All right, so that's it for today. I'll catch you next week. See you later.